This is episode 5 of Trading Bot Sessions, where we talk with traders who've built automated trading strategies and trade everything from stocks and options to futures and crypto. In this session, I speak with brothers Jeff and Joe Garis, a duo that has built a stock portfolio of automated momentum strategies across 20 different stocks that they've spent the last 2 years perfecting. We cover how they got their start manually trading options, why they moved into automated trading of equities only, how they learned to code in PineScript, and how they built a process for rigorously testing their trading strategies to avoid curve fitting and deep drawdowns. This episode runs a little longer than usual, but I trust you'll find the Garis brothers' story compelling and informative, as they've learned a lot in a short period of time and are finding the kind of success we're all searching for. Thanks, guys, for joining us on the show here. Would love to get started on having you introduce yourselves and telling us a little bit about your backstory as traders. As I understand it, you have a fully automated approach that you're taking with markets these days. So before we dive into your approach to markets, I'd love to know more about you and your background as traders and how you learned what you know today and the journey you've taken to get here.
Yeah, definitely. Well, I can start off. Jeff can fill some stuff in here. We got started on our journey going back to, was it 2020, right?
And yeah, well, actually, it really started in 2021.
Right?
Yeah,
2021.
When we
everybody was talking about trading and making money in trading, and at that point in time, from the bull market. So we felt like, why couldn't we do it? And so we kind of got started initially just manually trading. That's all we did. We did some option plays, looking at charts, made some money initially, lost more than we made. It went on from there to scratch our heads. We can figure this out if we work together. And that's kind of how we got to where we were working together. We're like, look, there's plenty of liquidity in the market. Let's put our heads together and try to tackle this together. And, that led from trading options to trading stocks instead, trying to do day trading plays, trying to do swing trading plays. We got into crypto trading. Lost a bunch of money there on what they call a scam wick. We kind of progressed, I would say, within that first year. I would say I think it was about maybe only about 7 or 8 months in, we're like, we hate manual trading. We want to automate this. Just waking up every morning and having to, another day where you got to sit there and try to analyze the charts and deal with that emotions of, I think now's the time to buy in. Oh wait, no, it's pulling back. I'm going to wait this out. Oh wait, no, shoot, I missed it. And just questioning every move. And so then we started getting into automated trading from there. But you want to share some more?
With my journey, it did start in 2020, but just like very mild. So I started to look at the market when the bull market was happening in 2020, when everything was going crazy. I had money in Vanguard, actually, and I decided I was going to, invest that way. And I did look at some companies on a fundamental basis or on some at like a technical basis. And I got into trades, and then I actually ended up accidentally getting into one of it was SNDL at the time, but it was like a stock that was heavily pushed like in the meme phase, and I was thinking that was going to go up even further, and then I waited too long to sell, so I barely made any money off of that. And then I was thinking, like, from some of my technical analysis, that like, oh look, here's a support, let me get in, it's going to bounce off of it. And then there's sometimes it did, and then sometimes it didn't, but most of the time it didn't then at that point. So I end up losing a bunch. And then I tried doing some of my own day trading just off of the MACD. Like, oh, look, if the MACD crossed, I get in, look, it made money here and it made money there. And then you try to replicate that, but it doesn't keep up. And so it just failed. And so whatever money I did make, like you said, then it just lost it all. Yeah. And then you feel terrible and you want to give up. And there is that whole, psychology that it just really messes with your mind. And
like what he was saying about trading something like the MACD, for example, we would look and even spend time manually back testing at the time because we didn't have any strategy coded in the trading view to run reports. And so we would just look back and, oh, over the last 3 weeks, this has worked beautifully. And then we would start trading it, and maybe it would work for a couple of days and then not anymore. And so I think it was around that time that we started to realize, if we could be able to have a strategy that we can run backtest reports on, maybe we'll realize this isn't working as well as we think. And that's when we started getting into. So I'd go out there on TradingView open source community and find strategies that other people had written and apply it to my chart. But then sometimes it's like there wouldn't be the necessary backtest and date range capabilities built in, so you couldn't hone things in, or I'd realize there was indicator repainting happening. And that was something that I didn't realize at first, that these indicators could repaint if they're not coded the right way. And so kind of quickly moved from that into, we got to figure out how to, do this ourselves. And I wonder if I could figure out how to code. And so that's what led then us into this journey. We're now at this point, I would say I do the coding, Jeff does the settings finding, because basically any strategy, he's kind of like the statistician, like any strategy that I code has a front end to it where you can adjust the settings. And so there's lots of stuff that needs to be played with to figure out, can we find profitable settings for this stock? And so that's what led us to creating our own stuff, because we realized there's a lot of limitations with the scripts people are putting out there. The best ones out there cost money, and then even then you don't know how they're working, because oftentimes they give something a different name, and here it's really just the RSI or something. But they'll call it something fancy. So but we also got quickly into realizing we wanted to add our own flair to things. Like we had our own ideas. It wasn't just combining together technical indicators. We wanted to try to do other things, like if price moved more than X% in 2 bars, then I want to get in, stuff like that. And so then in needing to code something like that, there was a lot more that I had to figure out on my own that wasn't out there already in scripts. So I would use a lot of websites, like there's one called tradingcode.net, has a lot of guides out there. Codify, I think it's .net, Codify spelled with a K. So I would use sites like that, find lots of guides, even watch YouTube videos, all that kind of stuff, and just trying to engulf myself in it. And then eventually would learn more, and even go back and understand what I had put in my code, because sometimes I was pasting in somebody else's code and figured out how to incorporate it, but I didn't understand how it was working. And then later on I would understand how it was working. But that's kind of how we ended up getting into the whole automated trading side. And then the other thing that would be important to share is just that our equity curve, basically when we were manually trading, was just sometimes we would hover around break even, sometimes we would be suffering massive losses. Where since we started automating the trading, even though we've had a lot of setbacks along the way, we've only made money since we started the journey. We haven't actually lost money. So
from our starting balance.
Yeah, starting balance. Yeah.
Thanks for that. That's a really good backstory. There's a lot to unpack there too. I'd love to know if you have an engineering background, what got you into coding these strategies? Do you have a background in that kind of thing? I think you offered some great resources on how you learned PineScript, but I'd love to know more about your background in engineering, if you can share that.
Yeah, I mean, for me, I was in the tech industry at a young age. I never did coding, but I worked for a computer consulting company, like a small one. The guy worked out of his home, and he wanted to hire a young guy that could do remote. This is back when remote work was just becoming a thing. So he had some bigger clients, pharmaceutical companies and stuff in the area. He would do all the front end stuff. I would sit there in the background on a computer, doing network analysis, trying to find holes in the network. And so from a security background, things could be patched up. And so, that was kind of my intro to the tech industry. I went from there to later on in my life, then I got into online marketing, which was still running campaigns on Google, other ad networks, a lot of like having to engineer the campaign, break down the stats on it, figure out what was working, what wasn't. So that was kind of how I progressed within the tech industry. So I always had that desire and that enjoyment from the tech industry, and Jeff has too. I mean, he even at a young age, both of us, we love computers. We would build our own computers. We would do everything we could having to do with tech. So for both of us, I know when we got into trading them, once we realized you could automate it, I remember having a conversation with him where I said, I think automated trading would be our thing because, we both are very technical and analytical and logical in the way we think. And so I do think that played into it, because if you're somebody that loves emotions, loves, going to a casino, you're probably going to love, where me, I'm too analytical. I would never go to a casino. I want to be strategic about my money. So, I think that.
Yeah, no, that's great. That's really promising for many people who might be listening to this. You don't necessarily have to have this huge background in engineering in order to really get into this. You've got this tech background, but maybe, no formal training in computer science or anything like that, which I think speaks volumes to the ease of PineScript, and the time that you spend learning that is going to be a lot smaller than I would say broader, classes in engineering or entire programming languages like Python or things like that. So would you echo that? Do you feel like PineScript was pretty approachable once you guys started diving into it and playing around with the environment?
Yeah. I mean, there's a lot of built-in commands, and even more than I realized initially. Like I remember coding my own momentum indicator, and then I realized, oh, you could just call out to the built-in momentum indicator they have. Oh, darn it! I wasted hours on this, but so there's things like that, or even like when it comes to adding in some of like the capabilities to be able to back test over a certain date range, that sort of thing. It's very approachable in that, I would say, between the ease of the coding language and the open source community. Because like when I wanted to add in a back testing date range, I went out there and I found guys that had done it already and shared their script openly. And it's not as easy as just like, well, let me just copy this and throw it in my script, because you might put it in the wrong spot. You might realize that there's other things that need to be tied in to your code. But the fact that you have this advantage that you're able to go and find the code that other people have, created, and then take that example. And, my advice to people would be spend more time when you're copying and pasting somebody else's code to now understand what it is that it's doing. Some early on, sometimes I would just throw code in there and paste and oh, I got it to work. This is great. But then later on, my script would be pulling up errors and I wouldn't know why. So
yeah, I'd be going and trying to do some testing and working with the indicator. I'm like, well, this isn't doing this, or this is doing that, and instead of that, and it was just like a lot of headaches, especially for Joe here, because I'd be like, well, we should get it to do this, or this is a problem. And it's probably good that I wasn't sitting in the room with him when he was coding, because I'm sure there's plenty of times he slammed something against the wall. So
I'll be around for that.
But I give him a lot of credit, because at the end of the day, he got it all done, even though it might have taken a week or whatever. So it will take a while, and you'll probably even, agree with that just be persistent. Don't give up.
Yeah, there's times when I literally just had to walk away, and go do something else for a while and come back to it. And then it would be crazy. I'd be working on something for 3 hours. And so just beyond ticked off at the script and why I can't figure out what's going on or figure out the logic behind what I need to accomplish. and come back and with this fresh mindset, sometimes even the next day, and I'd be like, okay, maybe I'm looking at this the wrong way. Let me try this. Oh my gosh, it worked. Took me a half hour instead of 3 hours.
The step that you made there to try to overcome emotional trading that was leading to drawdowns that were obviously damaging, and realizing that automation was the solution to the problem. Can you speak to any resources that helped you along the way, that helped you understand what that process really looked like, how to thoroughly backtest, and how to look for backtest traps? What's real and what isn't. How it led to curve fitting, things like that.
Yeah, so it was just like really important when we started to find like good entry points and good indicators, and it is really hard to try to find something that will work continuously, because there's plenty of times when I went to back test something and it just didn't make money. So there's like plenty of times I'm sitting for hours playing around with something, trying different indicators, and like, okay, this is not working at all. And for a while, much of our journey was just like we would only look at maybe like 6 weeks of data, because for our trading, a lot of it ends up being the first half hour of the day, like the momentum type where stocks really push hard. And so we're like on the 1 minute chart. And so we like only could look back 6 weeks. And so there was big curve fitting in that, because you can find settings that will tailor to whatever you want. And we did include like a stop and take profit, which is obviously very important. You want to make sure that you're going to make some more than you're going to lose, in the long run. And so once TradingView ended up coming out with what they call deep history, that was like a big breakthrough, because then I ran reports and I was like, oh, well, all these settings, they didn't make money continuously. They just always lost money, or you just end up breaking even after 5 years.
Yeah, it was real eye-opening. Like once we, now deep history is something that you only get if you have, I think they call it pro account. Yeah, the premium account.
Yeah.
Highest level, but which a tip on that is upgrade each year on Black Friday, and they give you a 60% discount. But anyway,
I paid for 2 years.
Did you? Yeah. Perfect.
Just in case they don't.
Yeah, exactly.
Yeah. So, but that was a real game changer for us, because then we would look back and see, oh my gosh, really things were breaking down, or even giving us the feedback and knowing like, well, what kind of stuff is actually working out like over the long run. We would realize like maybe there's certain things we need to rip out of the code because it's really not doing anything, and it's leading to more of the curve fitting. So that was a big thing, but I think when it comes to curve fitting, that's like one of would be like our big advice to anybody getting into automated trading, is to just keep in mind that any settings that you find, even if you're using deep history and you're looking back and it's like, well, this worked over the last 2 years, don't assume it's going to continue to work, or give yourself the opportunity to do what's called forward testing. This might involve, if you're not willing to risk the money, put it in a paper trade account, which Traders Post has the ability to do that. Now, of course, you're not going to always see slippage, true slippage, and all that kind of stuff. So you could even throw it in a live account, make a trade, a small number of contracts, for example. That way you are getting an idea, because we've done that before too. That way you are getting an idea of slippage. Or maybe you see, oh, shorts fail sometimes. That's not good. That's screwing up my strategy. But from there we would realize that really then we have to forward test as well and make sure these settings are truly ones that are going to continue to perform as well, not just that they did in the past, because we joked before that we had become great stock historians. We were great at studying the past, and it's like, if only we can make money from being stock historians, but you can't. So but we realize, too many times, the more indicators you combine together, the more factors that are going into your trading. Like say you have a main driver that you're getting into these trades, but then you're adding in like 10 different filters. Every filter you add, even the time of day that you're trading, all that stuff is going to add to the potential of curve fitting. And then so you think what you're doing is going to continue to work, but it's not always going to continue in that way. So, we found the more data you have, the more trades that it's taking, the better.
I love that answer. For the uninitiated, curve fitting or overfitting is essentially you've created a strategy that matches what happened in the past, that makes it misleading in terms of how the performance is standing up. And one of the ways that I think you can avoid curve fitting or overfitting is that walk forward test. But you're mentioning now that as well, that the number of trades that are taken is another indicator, because it's statistically less likely that you've curve fit if you've had hundreds or even thousands of trades over a period of time back tested, which is hard to do in TradingView sometimes, depending on your timeline. Do you have other techniques you use to detect for curve fitting?
Well, that's like the primary thing, like with deep history, because the only time we could look back for years of data and a number of trades was like trying to do a 30-minute or 1 hour time frame, because then you could look back further. But for the 1 minute, we were very limited, and if we tried to get in on a 30-minute right away, well, then TradingView wouldn't give you an accurate back test of like, oh, look, if you went in at this time, at the open, and you only risked 2%, well, that candle can be more than 2%. And then by the time you got out, so it was just very misleading. You didn't know exactly. So that's where like the curve fitting ended up taking place. So really the deep history was it, because some stocks that we trade have been around for a while. And when I was able to back test some of the settings, run all these reports, and for 5 years, it took 1,500 trades on the 1 minute, and it's had a nice equity curve up. It shows some realistic drawdown, because that's the other thing. You want to see realistic drawdown too. You don't want to just like think, oh, look, it's a straight line up, or if there is a period where it was flat, like, oh, we don't want that, so you have to realize that you're, kind of like, reduce your expectations. And that was like the other thing with, even though we're doing a bucket of stocks where we found settings that have worked for years and like 1,000 trades or whatever, we don't know if half of them are all going to experience drawdown together and then keep the whole strategy, flatlining it. So
yeah, because that's the other thing that we talked about before is like it would be nice, and I've seen where other traders are asking TradingView to do this at some point. I don't know if they'll ever have the processing power for this, but to be able to layer multiple stocks together,
Yep.
Even if it's different settings, different indicators, and different charts, that you could say, hey, pull these 20 charts together and show me a single equity curve of what it would look like. Because sometimes, we're looking at a chart and it's like, well, each of them could have experienced, even if we're giving each 20 stocks a certain percentage of our portfolio, we might see that, oh, each of them is capable of producing like a $500 drawdown. Well, what if 8 of the 20 stocks produces that at the same time? And now you're getting more drawdown than, you would like, or maybe were expecting in the back of your mind. So you kind of have to be prepared for anything. That's some of the stuff that we've seen, like even, and this is the other side of automated trading. It doesn't always take out all the emotion, because then you're sitting there doubting, what do we just do? Like, does this even work?
Yeah.
Do we just waste all this time coding and finding these settings? Does it even work? Because, we made money for a few weeks, then we're losing money for a while. And, we're even experiencing one of those setbacks right now where we started off December a little shaky, made great money the rest of the month, and then it's just been, flatlined and losing some money lately. And so then we're like, okay, is everything definitely as it seems? Do we curve fit again? Is it working? And I think the key there is, taking a look at things and is it within your expectations of what you've seen from the past? Is it consistent with what you've seen in your history? Because, not that you shouldn't question things either and just, stay back because maybe those emotions are good because it would cause you to reflect and say, maybe these aren't good settings. But you don't want to pull out from the trading too early and then like, let me turn everything off and then here it actually would have done really well because we've had that before. But then let's pull out of it and just paper trade it. And then here it did really well later on. So we kind of look at things and like, see, is it consistent with the past? Because then if we break it down, we see out of these 20 stocks, theoretically, if a third of them all experience drawdown together, that could explain what we're seeing right now. And actually we could be in for even more drawdown before it turns around and travels back up and makes us money in the long run. So you gotta, not just be analytical from the point of back testing history, but also we refer to it as forward testing and, just making sure that what we're seeing now live is consistent with what, we've seen in the past.
And I would recommend that when you have a strategy, because there's plenty of times we've traded live and it didn't make the money that we thought it was going to make. So just because of that, or like it was breaking even, we just gave up on it. But I would recommend not giving up on it. You would still just continue paper trading because there's a few strategies that still have made money, but at a slower pace. And like, going from like, oh, I can make a living to this to like, oh, that's just like maybe a good, 401k growth or whatever in a way. But just the point is that strategies are holding up. It's just, not as well as you thought. And that's what kind of like the forward testing is. But just don't give up on paper trading strategies because, the moment you give up is like when they'll actually turn around. And if you turn it off, then you're like, I wonder how that strategy would have done. Like, 6 months from now, you're like, I wonder how that would have done. And you wouldn't know, so.
Yeah, I think you raise a good point there, especially with back tests that cover much longer periods of time and have obviously held up over a very long period of time. If you run that for a month and assume that the performance has tanked, you haven't really given it the true opportunity to perform over the same period of time. But you're describing a very sophisticated approach to using TradingView as well. And I think you've correctly highlighted one of the disadvantages of TradingView, which is that it doesn't allow you to run a test across multiple securities for a combined performance. I can understand how you've created a strategy for individual securities one at a time, and then you're combining them together in a basket of stocks, running them effectively all at the same time. Do you do any analysis amongst those securities in terms of correlation or even beta factors? Is there any factor analysis between each security before you decide to combine them together in one portfolio?
Well, that's a good question. I mean, usually it comes down to there's only so many stocks, like when you're trying to do momentum day trading like we are, there's only so many stocks that even work with that potentially, because some of them just don't go through big enough moves because we kind of look normally for stuff that might we could have a stop loss around 1% and take profit around 2%, and it might be a little over that or a little under, but right around that number. So you got to find stocks that are constantly, moving like that. So a lot of like these Chinese stock, tech stocks and everything, are good for that. Now, even pharmaceutical stocks over the last couple of years, like Moderna and Novavax, have been good for that. But there's any of those speculative stocks, like we just kind of, I don't even know if there's any resources like you've looked at, Jeff. We've kind of just over time ended up kind of figuring out like, oh, these are the stocks that tend to move each day. So we don't necessarily like try real hard to make sure they're spread across different industries.
Okay.
And that could be a fault, in our strategy, just because then that could explain why, we see more drawdown at the same time in some cases, because a lot of these stocks like tend to move together. It's just all like one, oftentimes the stock market can be one cohesive movement, especially if most of your stocks are all part of NASDAQ or all part of the S&P, like they might be moving together.
Are you trading stocks only?
Yeah.
Okay.
Yeah. We did, option plays back when we were manual traders. We even had tried to paper trade option strategies through Traders Post through TradeStation that can then allow you to paper trade options. And anything that we tried so far just failed miserably because of the way the option deltas change. And so for us, like, because you can't backtest that.
Right.
So you can't backtest an option play and see how all the Greeks would have played into that profitability. You can only see, did the stock move up 2% and hit your take profit? Yes, it did. So stocks are.
But then how long did that take? Because we've already had options where we held onto it and it won. So it increased in value and won the trade, but we barely made money or we broke even. And that's like why we ended up going to just plain old stocks, because, you know, it doesn't, the Greeks, you know, the time factor doesn't play, you know.
Yeah. I remember back when we were manually trading Tesla and being in an option play where Tesla had crashed pre-market. And I was like, you know, I'm going to buy an option contract because I know this thing's going to go up. And it did. It went up like $5-6 a share. And I was still down in my option contract. So because they factored in the volatility, and I think the assumption was it's going to keep going down. So this has to go up a lot more for the option contract to actually be more valuable. And I remember, you know, saying to Jeff after that, man, if I would have just bought 100 shares of Tesla instead, I'd be up like $500 or $600 right now. But instead, I'm still down money. And after that, I was like, you know, forget about it. I'm done with options. So it's just more predictable, basically, is what it comes down to when you're trading stocks. Like, if it goes up, you made money. If it goes down, you lost money. It's more simple. You don't have all those extra factors. And I think when it comes to automating trading, that becomes more of a factor, because now as you're trying to back test, as you're trying to isolate factors, right? Because you're taking a more like, you know, systematic approach to things. And so, you know, when you're doing that, you want to eliminate as many factors as possible and be able to figure out how can I make this work, you know, more robotically. Basically, that's what we're trying to do as automated traders, make things work more robotically and just follow this set of rules and make money. And so there's a bunch of different, you know, delta, you know, Greeks and different factors in an option play that could destroy your strategy, even though it works. Technically, it's profitable, but then it doesn't work with options. So that's kind of what we found. And unfortunately, that means you got to have more equity to trade with to make more. But you know, because options, you're getting a more or less huge leverage on your money. So
yeah, that's one thing to point out. Like our strategy is day trading, so like there's no position that is held overnight. So then, you know, you have to have at least that 25,000 to be able to day trade, and that's how our strategy then, you know, works. And so like that's why you know, you have, for some people it makes sense to still try options because you don't have that that buying power, and you're just trying to get in and out of trades, and you might not be able to, you know, hold trades, or maybe you don't want to swing trade or whatever.
I think that's what makes futures attractive for a lot of people as well. Lower margin requirement, you know, there's leverage there as well, and there's no pattern day trading rules, things like that. So you can go long and short without having to borrow a whole lot in margin. But I think on your side, thank you for answering that question too, around how long you're actually holding these for. They're all intraday trades. Do you go through the screening process on new stocks every morning then? Can you walk us through the decision criteria on which stocks you select, and maybe some info on what indicators you're using to find momentum?
Well, if we just pretty much strictly stay with the stocks that we chose, like whatever we back tested and found worked, we stick with trading them, you know, every single day. So as long as those, you know, rules met and it launches a signal, we always take it. So it doesn't matter.
How big is that basket of stocks then? How many securities are you typically trading?
Currently we have 20 of them.
20.
Well, yeah. And through our testing, we obviously make sure that there isn't much slippage and that all the shorts go through, because that'll ruin the strategy too. So, yeah, we end up just taking all of those trades, you know.
Yeah. And sometimes it can be, you know, for the worse, because you can have a stock that just goes through a terrible period for a couple of weeks, especially if there's bad news surrounding that stock. I remember, Futu is one that we trade, and back, last January, February, whatever it was, when they were talking about, well, maybe some of these Chinese stocks will be taken off the US market. And, so it was just like kind of, flat lined, and most of the time it wasn't trading normal like it would normally. And so it lost money for a while. And I remember at the time, that was when we like moved it into paper trading. And then so it went through that for a little bit. And then it was like, oh, never mind. China decided it's cool, and they can remain on the US stock market. And then it started trading normally again, and it made all kinds of money. And then we're like, darn, we should have kept trading this thing. But
to your point earlier, Jeff.
Yeah, to our point earlier, where sometimes you just gotta keep your cool and know that, because it's easy to look at a backtest report, and whether it's a few months or a few years of data, and be like, man, this is great. I'm gonna trade these settings because it made, say, 270% gain over the last 3 years. That's awesome. Can't beat that kind of gain. But it's easy to then overlook the drawdown and not really factor that in, especially when you're trading a basket of stocks like we're talking about. And you don't know how many would have experienced that max drawdown at the same time. So in your head, you're just kind of overlooking. You're willing to overlook those factors, like when you're dating and you don't see any of your partner's personality flaws right away, and it's kind of like that. And you get to a point where then you realize, oh my gosh, I overlooked this. So it's not that my strategy is not working. I just overlooked what the drawdown really could look like, especially if multiple things were happening at the same time. And so you just never know. And so you got to keep that in the back of your mind. Like, don't overlook the flaws, be realistic about everything. And, that way you go into it and if your max drawdown, say you have a $50,000 account, you could be down potentially 10% if everything was not doing well at the same time. Or are you willing to suffer that $5,000, drawdown?
So are drawdown surprises like that enough to remove that security from the basket that you like to trade every day? Or maybe can you speak to what the rotation really looks like if you find new securities that you want to bring into the fold, or existing securities you want to remove?
Yeah, that's a good question.
Yeah. For us, like when I'm looking for, because when he codes and has all these indicators, I then am looking for new potential tickers, and for some of them, like I when I look at them, I find settings, we'll test it out with a low position, because we want to make sure that shorts go through and that it's something that won't be too far off from where TradingView says our entry was, because we don't want to get in and really we're already down, 0.5% or whatever it is,
So the strategy is the same for all of the securities, right?
Yeah, well, every single stock has its own like pattern,
little settings and
almost like ATR, their average true range in a way. Like, so we, since they have their own pattern, not every single indicator, we can't just do a copy and paste.
Right.
And so some maybe a 1.2% risk and a 2.4% take profit is ideal. But then another stock might be like, okay, because a lot of it's like 1 to 2 that we're doing for risk reward. And so like maybe another one is 1% risk for 2% take profit. But anyway, like that also plays a factor. But some of the indicators that we use, we switch it up. So I might look and test out settings for one indicator, and then okay, this isn't working, so I'll toss it aside and I'll try another indicator and play around with that. And then I see that works. And we have a lot of like throughout all the months, couple of years now we've done this. Like we've figured out some filters that work really well, because that's a key thing too. It's not just indicators, but also filters. You want to be able to try to filter out. There's obviously the famous 200 EMA. Now some stocks maybe we use that, but there's also like a proprietary thing that we've discovered and coded in there.
I won't dig in there.
to like essentially filter out and maybe, oh, we only take these trades then.
Mhm.
So
Yeah,
that has definitely helped a lot, because most of the indicators we use that, and it really does help to make sure we get the best entries. And that's why we do it every single day, like trade them every day, because of what the history says. It's like we don't know what each day, just like when you're in a trade, you get in, but ultimately you don't know what's going to happen. So you're just basing it off of history, like, well, this trend line, or these wedges, this is what has. So you try to like find the best.
Yeah, from a coding perspective, like basically when he's talking about indicators, it's really what TradingView calls strategies.
Yeah.
But each one, like, I'll have a base indicator that is like the main driver
Right.
of
Of the
it.
signal.
So for example, there's a freebie for traders out there. Like one that we found works well is Super Trend, which is a popular
An ATR.
indicator.
Mm-hmm.
Yeah. Now, if you add filters on top of that, so essentially it's like, well, if these super trend conditions are true, and it's also meeting a certain EMA requirement, and you could add in other technical indicators. You could add in some of your own ideas, and that's like part of what has worked the best for us now that we realize is like not just going and using technical indicators, but coming up with your own unique ideas. Like think through the market, and if you're thinking to yourself, you know what, I wonder if for example, something real simple is like back in the day, I thought a lot of traders use Heikin-Ashi candles, and I thought, well, I know you can't use Heikin-Ashi in automated trading because like a Heikin-Ashi chart, because the price isn't really the price.
Right.
And so then, I thought, well, I wonder if I could take the Heikin-Ashi formula and figure out if candles are bullish or bearish in a Heikin-Ashi world, and then use that as like a filter or a form of confirmation. So then we would add that in, like, so if all these other conditions are true, and you're trying to get into the long, and oh, by the way, is the candle currently a bullish Heikin-Ashi candle? And then if it is, go ahead and get into the trade, and it's like another form of confirmation. So, but that's one of those things where I'm like, okay, I know a lot of traders use Heikin-Ashi candles, and that can be a good form of confirmation. So let me try to add that in. That's not like necessarily, it's not a technical indicator out there. It's not necessarily something that people normally think of. So if you can come up with these unique ideas that that follow more with the flow of what traders do that works, and then you can figure out how to incorporate that into your code. Oftentimes those can work better, because then, if the smart money out there is manipulating the market, but they don't even understand what you're doing because it's very unique, you're not just using the RSI crossing zero or something like that, then you have an edge too, because your strategy is more based on critical thinking and not just some technical indicator that somebody came up with 20 years ago or whatever.
How do you decide how much to allocate to each of these securities across 20? Are you equally weighting them, or do you decide how much capital to apply to each stock based on its performance? Can you speak to that a little bit?
Yeah, originally when we first started out, we would just equally weight them. Like, okay, each of them are going to end up just taking on a $2,000 position, and okay, we have let's say $50,000 we can do, and that's what we're gonna end up doing. So but then since then we ended up starting to do what was called martingale. So we end up scaling up as the strategy loses. We end up scaling up the position, because the idea is that it'll win eventually. So we start out low, and then as it progresses, and then once it wins back all of its losses, and then we add that in.
Yeah, so, and to be clear, you gotta be careful with that type of strategy, because I'm not telling people to go and gamble. So we, at some point, for example, you could just still cut losses and realize losses if it's getting too deep into the consecutive losses. But you can also trade a 1 to 2 risk reward to put things in your favor. But just the idea that we kind of came up with this because it was like, well, we kind of continually will we'll always find that there's more losses than we think. Like if you back test and you find that there's a 60% win rate, and then you start trading it going forward, you quickly realize that it's really 40% win rate, and you don't know why. And you could sit there and you could tweak settings all day, or you could say, well, if it loses on the next trade, I'm going to take a little bit bigger of a position and then try to win back my losses. And there's, different approaches you could take to that. Try to just make back enough to break even now and move on to the next trade, still make money. And so you got to be careful with that, because then you got to make sure you have the buying power to sustain, as you increase your position each time. So those are all factors that you kind of have to try to think through, that back testing isn't going to show you. But that is the way that we kind of then will size the positions accordingly. Because then if something is taking 5 or 6 trades of consecutive losses to win, then we're increasing the position each time. So
yeah, at some point you do have to cut your losses though, because like you said, you run out of money and it looks good, like, oh look, if we just kept increasing, but there comes a time when you can't. So and you probably wouldn't even want to. So anyway, it's like, and that's sort of a way to help the forward testing, because let's say everything looks good, like you consistently made money, but if the settings do break down some, and let's say it wins 1 time out of 6 still, if that ends up becoming a thing, then you can still make money. So it's kind of like a way to protect itself, and that's, I think, part of why we started to see more consistent success with it. We're just a couple months in, and we've had just break even point right now, but we haven't really lost much money. And
compared to what the market's done, that's great.
Made good money in December. January's been pretty much break even or some loss. But and that would be the other thing that just encourage traders with, is like looking over a longer period of time, like having more realistic expectations, because the dream always is, of course, to make a full-time income day trading, right? Not just make some extra side income, ideally. But you could, so most traders, you want to make either money every day or every week. Initially we would be obsessed with that, where we come to realize, let's look at it more on a monthly or even quarterly, basis. And because you might even have a bad month. Now, ideally, if your strategy is good enough that a bad month is maybe break even or close to it, that would be ideal. But just that you have that perspective, that can get you through the bad times, because then you stick it through, and maybe the next month you actually, so let's say your expectation was to make 5% gain every single month, and on average, but one month you actually lost 2% instead. But then the next month you make 12, because the market's just moving really well according to how your strategy is tweaked. You make 12%. Well, now everything is averaged out to what you thought. But had you just looked at that 1 month and thought, it's not working, I'm out, let me quit altogether, whatever the case might be.
You have to have a long-term perspective. That's for sure. Yeah, I appreciate you saying that. One question I forgot to ask earlier was around some of the stocks that you've selected. Are you always long and short on stocks? And does shares available for shorting come into play? Have you run into situations where you can't even find shares to short?
Yes. Yeah. Well, we do base all of our settings off of shorts and going through. So that's why, like, when we test with just a very small position to make sure they go through. But we've had instances where they are going through, and then there's a day when they aren't. So there are certain securities then that, like, okay, it seems like they're not really reliable, so let's just do long only. So we just disable. And we actually have one security that we've had to change to now, to just going long only, because of that.
Yeah, and from a coding perspective, like I just added something in recently that is really cool. That basically we can choose to ignore shorts, because when you're finding settings, sometimes they work better taking both long and short. Because if you choose long only, then without the short in there, the long could see a long. The strategy could see a long in a different spot or sooner than it would if you had taken the short. So like Jeff came up with this idea and he was like, look, could you make it still take shorts, but not take shorts? And I'm like, that's impossible, because TradingView, you have to create an entry. Like you can't just, tell it to have an entry, but not, but I'm like, okay, well, what if I just, I still had to take shorts, but if you check this box off, then the shorts only take one contract. And then that way in back testing, more or less you're seeing it like it's not taking shorts because it's taking one contract because it has to take something. And so it was like our creative workaround where it's like, now it's, if you check that box, it's taking one contract on shorts, and then that way it's still taking the short. So it's still following the same trading trajectory, that you would have if you were trading both long and shorts. Mm-hmm. And then that way, if shorts start to fail because there's not enough short shares available, it's not like, Forex where you could just short to your heart's content. But, there has to be these short shares available, and sometimes they're not. So then we're able to then say, okay, let's still trade the settings that we have. But then when we automate it in Traders Post, I have each entry long, entry short, or exit long, exit short, firing an alert message from that I set within the code. Mm-hmm. So it's a different way of doing the alerts compared to just putting it in the alert message box. When you're creating an alert, it's pulling the alert message from the code essentially. So by doing that, then when it comes to, if we're trying to ignore shorts, then for the purpose of Traders Post, we can just not even send the alert for getting into a short, or we could still let it trade one contract, and then that way, as soon as shorts start to go through again, we can see that, hey, they're actually succeeding now, and but it's only attempting to take one contract. So there's like workarounds like that we've had to create over time. But
a lot of what you're describing with this grand portfolio is only back tested on each security. So it's very difficult to see how some of your selection criteria and long short decision making plays out across your entire portfolio. You can't really see that in a historical backtest, because that is the one of the major disadvantages with TradingView is that they don't allow you to test all these securities at once. So how do you mitigate and gain confidence around this idea that once you blend all of these trades together, you're still going to see positive performance in aggregate?
It's just simply because you have just a probability. It comes down to probability at that point. There is that chance that, I guess that off chance that half of them or even all of them experience drawdown together. But it's that idea that like it won't, because even when you're just investing in a 401k, you just like you have a diversified portfolio, and you're just imagining one will protect the other, and that's practically what it is. And I think that's why in the 2 months we've done this, we haven't had any more than, well, I guess right now we're at like a 4% drawdown, but like it's not like a crazy amount compared to what probably some people are in their portfolio right now.
Sure.
Yeah. Well, like and so it protects it. Like, okay, look, this one security, if you trade it by itself, it would be down like 15%. But then because you have all of them going together, and some are winning, they're like continually being profitable, and some are just breaking even, others are tanking, but that's what's keeping everything up. And so as a strategy as a whole, if we can just only see 3-4% drawdown and then still see it rising and be up, let's say 15%, of course that's going to be great. You just got to be able to suffer through it. And right now, as traders, as automated traders, we have to deal with that right now because
Yeah.
our strategy, went on, and then now it's just like this right now. We just got to be patient.
Well, and going
Yeah.
back to the emotional side of even automated trading, that's, where we found ourselves before. And for example, with swing trading strategies, I know usually, if anybody out there watching this has tried to find swing settings, that stuff can be down 15, 20% very commonly. And it is actually very common then for them to get into the wrong side of the trade together. And so, we had to kind of do a reality check different times and tell ourselves like, look, this 5% drawdown we're experiencing, this isn't really that bad. Okay. Let's put our big boy pants on and get through this, because, and I'm sure it's like that for everybody, but I hate any drawdown. Like, I would love if I could create a strategy that only ever made money, but I think, especially because of YouTube videos, you go out there and you watch these guys that are trading, and a lot of times they're only experiencing or showing their best experiences. I remember when I first got into day trading, watching this guy Ross, that I forget his last name. He does these day trading plays, and it seems like he's making money every day. And you're like, my gosh, that that's what I could do too. And there's other traders out there that it looks like that. It looks like, gosh, they're making money every day. So you think to yourself, man, if I could just make like a consistent $500 a day, then I can make a full-time income trading. But the truth is that that's not real in most cases. And if you can achieve that, great. But losses are part of the whole experience. So then you have to remind yourself of that. And the way that we make money is along the way losing money. And so you have to view that as just part of it, almost like running a business. You got to treat your trading like a business. And if you want to be serious about it, just like a business, you have expenses. So I remember saying to Jeff before, we just got to look at this as like our losses, those are our expenses. And because the only other expense we have is paying traders post, trading.
Sorry about that, guys.
Yeah, you can't do anything about that, but good job for providing what you do for what you do. So, but other than that, our losses are kind of like our expense. And so, like a company would go out there and dump, $10,000 a month into marketing so that they can make $100,000 a month in revenue. Businesses make those kind of decisions every day, and they're more than happy to do that. So if we can have that kind of risk reward where, say, you have a $100,000 account and maybe you're down $10,000 before it travels up, and then eventually you close out the year and it made you, a 50% gain. And so you made $50,000, but you lost at one point, you were down $10,000. You got to have that perspective that kind of stuff can happen.
Maybe you guys can share what the outlook for the future looks like. What are your plans for 2023? Do you have any major goals on what you want to accomplish next?
Well, yeah, I mean, our big thing next is really to take what we have and be able to make it available to other traders to copy. Like so if somebody's trying to get into automated trading, doesn't know what they're doing, wants to be able to follow traders that have figured it out already. Although, for us, we're trying to do that through traders posts, where then people could copy, subscribe to our strategy. Right now we're just trying to get more time under our belt of trading it on our own. And that way we can share with people what it truly looks like live as we've traded this. And that way, if somebody wants to copy our strategy, they can, but they know, like, look, it was down at one point, 5% before it traveled back up. So just make sure whatever amount you're putting into it, that you're willing to suffer through that. And so that's our next thing that we're trying to do. Even the indicators that I've coded, the strategies that I've coded, we talked about them making those available where people could pay a monthly subscription to get access to all those indicators and just then play around with settings and use them on their own, because there are providers out there that do that sort of thing. But a lot of them, I feel like it's like they went into it trying to just come up with something they could charge traders for, instead of, having gone through a journey like we have, where it's like we're just trying to make money for ourselves, and then by the way, what I created, now I'm willing to let you use it if you want. And so that I think, so I do think then our indicators could work a lot better than some of the things you see out there, like that traders would normally find as they get into the space.
If there's any new approach that you guys might try in the future, do you have other markets you might explore, or another ways you'd want to approach markets? Have you given any thought to that?
Yeah. Well, obviously we're just sticking with stocks for right now, but there's other things that we're going to be testing out with Forex, trying that. I think that's mainly what we're going to be doing. I mean, possibly crypto, but I don't know. We might, because we got like screwed over, from that. And so we might just stick with the Forex to try testing that out and come up with a system.
Yeah, because Forex is one of those where people can trade with smaller balances and where they can still day trade essentially. It's not like stocks where you have to, where you're more limited if you don't have a $25,000 account. So,
well, thanks again, guys, for coming on the show. This has been fantastic info. If anybody wants to reach out to you or find you on social media, is there any handles we can share with them?
Yeah, I mean, for me, I am on Twitter. It's just at Joe Garis. We have a domain name, tradebros.ai, that we've purchased. We don't have our website up yet, so that's something that people can look at in the future once we get everything up and running, where we're looking to sell our indicators and our strategies and take on clients. People can look us up on Facebook too, because I've had other traders connect with me that way before, and we just
I am on Facebook.
Get to know each other and chat, and I'm always up for exchanging ideas, collaborating with other traders too, because if there's equitable knowledge to be shared, it's like, why not? Let's help each other, too. So
absolutely. Great. I'll put those in the show notes. And thanks again for the time, guys.
Yeah. Thank you.
All right. Thank you, Mike.